I currently judge that U.S. economic growth is likely to be sufficient over the next year or two to result in further improvement in the labor market. As you know, there has been considerable focus on the first increase in the federal funds rate after nearly 7 years in which that rate has been at its effective lower bound. We've tried to be as clear as possible about the considerations that will affect that decision. Of course, even after the initial increase in the federal funds rate, monetary policy will remain accommodative. Economic conditions may, for some time, warrant keeping the target federal funds rate below levels the committee views as normal in the longer run.
I know the FOMC is going to meet in a few weeks. Would you like to give even a more precise hint what they might do? But if you don't, were you saying in your remarks that whatever the Fed might do, the FOMC might do in December, that it might do it consistently for another year or so? In other words, the last time the Fed increased interest rates in 2004 to 6, it did it fairly consistently. It didn't just do something one time. It moved fairly consistently through a year. Were your remarks designed to say that you probably would do something like that again?
Well, I appreciate your asking that question because I think it's very important for me to emphasize that there is no such plan. Okay. And what we do, if we decide to raise rates after that, there is no plan to proceed over time in some mechanical or calendar-based way. The actual path the short-term rate will follow will depend entirely on how incoming data influence our assessment of the outlook.